Some landlords in Wellington have resorted to incentives like food vouchers in a desperate bid to get tenants. The number of empty rentals in the capital is at its highest in a decade and reflects the flat housing market. As political correspondent Zane Small reports, it presents a challenge for the government to grow the economy at a time when homeowners don't see the value of their major asset rising.
Wellington's rental market just did something nobody saw coming. After an entire year of landlords bleeding money, offering free weeks of rent, grocery vouchers and slashing prices by $90 per week just to fill properties, demand has suddenly surged 16% in a single month. Here's what happened. Throughout 2025, Wellington's rental market was a bloodbath for property owners. The median rent crashed from $650 to $595. Landlords were offering desperate incentives, $400 grocery cards, damage forgiveness, even paying moving costs, just to get anyone through the door. One property dropped from $1,400 per week to $675 and still struggled to find tenants. TradeMe data from June 2025 showed over 1,700 vacant rentals in Wellington, the highest in a decade. Landlords went months without tenants. Some pulled properties off the market entirely to renovate because they couldn't fill them. But in January 2026, everything flipped. TradeMe data shows a 16% year-on-year increase in demand for Wellington rentals, while listings only increased by 1%. Students are flooding back into the private rental market for the first time in 5 years. The power dynamic between landlords and renters just reversed overnight. And here's the kicker. While the rental market is recovering, Wellington's housing market is still falling. QV data shows Wellington house prices dropped another 0.5% in the December quarter and are now 3.6% lower than a year ago. Some parts of the city are 30% below their peak values from January 2022. So Wellington is caught in a whipsaw. Landlords who survived 2025's rental bloodbath are now seeing demand return. But homeowners are still watching their property values collapse. First home buyers are wondering if this is finally their chance, or if it's still too expensive to enter. This is the story of Wellington's property market right now, a tale of two crises colliding. So in this video, we're going to break down Wellington's dramatic rental market reversal and what it means for the capital's housing crisis. We'll look at why landlords got crushed in 2025 with the highest vacancy rates in a decade, examine the sudden 16% demand surge in 2026, and explore what's really happening with house prices that are still falling despite the rental recovery. This matters whether you're a Wellington landlord who barely survived 2025, a renter who negotiated massive discounts and is now facing competition again, or a potential buyer trying to figure out if now's the time to enter the market. Let's get into it. Right, so let's start with what happened in 2025, because it was unprecedented for Wellington's rental market. The median rent dropped from $650 to $595 in the year to November 2025. That's an 8.5% crash. And for context, while Wellington rents were collapsing, Auckland rents remained stable and Christchurch rents actually increased slightly. Adam Cockburn, a salesperson at Lowe & Co. and property investor, describes it bluntly. Throughout 2025, there were multiple stories correctly reporting that the Wellington rental market was very, very tough. Not tough for tenants, tough for owners. Peter Ambrose, head of the Property Investors Federation and president of the Wellington branch, says the number of vacant rentals in the capital was the highest he'd seen in a decade. Wellington usually hovers around 500 to 1,000 vacancies according to TradeMe listings. In June 2025, it peaked at more than 1,700, and that's a conservative snapshot. It didn't account for rooms advertised on social media. By September, there were still just under 1,400 vacant rentals, which Ambrose called extremely high. So what was driving this? Job losses in both the public and private sectors, plus lower numbers of university students. Wellington was emptying out, people were leaving for employment opportunities elsewhere, students weren't coming back from the halls into private rentals post-COVID, and the demand for housing across the board just collapsed. Now, here's where it gets interesting. With a glut of vacant rentals, the power dynamic between landlords and tenants completely flipped. Serena Gibbon, founder of Tenancy Advisory, called it a flipping of the script in terms of the power dynamic between landlords and tenants took full advantage. Ross, a South Coast resident, learned his property manager was concerned about filling his place. So he asked for $90 per week to be knocked off the rent, and got it. Just like that. $90 per week. Lower Hutt resident Angie had an even more dramatic experience. She said, "Every place we've applied for, we've been offered the tenancy. It felt a little bit desperate. Felt a bit of desperation from the property managers. Landlords were offering all kinds of incentives. 3 weeks rent, whiteware, internet paid, moving costs covered, $400 grocery vouchers, 2 weeks free rent, even damage forgiveness for cracked stovetops." Angie was tempted by one place that had dropped from $1,400 per week to $675. Think about that, more than half price. But on a second viewing, she found a massive leak in the communal hallway that wasn't being attended to. The property had been neglected, and it was coming back to bite the landlord. Now here's where Wellington's rental market does something nobody predicted. After an entire year of landlords bleeding money and offering bribes just to fill properties, demand suddenly surged. TradeMe data from January 2026 shows a 16% year-on-year increase in demand for Wellington rentals. But listings only increased by 1%. That's a massive imbalance. For context, nationwide, listings are up 4% and demand is up 8%. Wellington's demand surge is double the national average. Adam Cockburn says the story has completely changed. The story now, so far at least in early January 2026, is that of a recovering rental market. So what's driving this turnaround? Students, specifically students flooding back into Wellington's private rental market for the first time in about 5 years. We're seeing a big increase in students coming out of the halls back into the private rental market again for the first time in about 5 years, Cockburn explains. And students are feeling the squeeze. Lily Malcolm and Trinity Mann just finished a 2-month flat search in Wellington. Trinity described it as stressful and intense. Here's the comparison that shows how fast things changed. Lily says she and 3 flatmates searched for a place a year ago and secured the first flat they viewed. This year it took around 15 viewings. From 1 viewing to 15. Last week, actually, we said, look, if we don't have anything by the end of this week, we need to start thinking about who we can stay with if we need to go home. Aidan Donoghue, president of the Victoria University of Wellington Students Association, says students' experiences have been a mixed bag. Prices are roughly the same when looking at similar-sized properties, but landlords are being slower to respond. And the incentives landlords were offering in 2025, they're changing. Donoghue says they're less likely to come in the form of rent reductions now. Usually those will be in the forms of either damage forgiveness or within some more odd things like gift cards or other sorts of incentives. He gives his own example. Myself, for example, I was offered, in exchange for staying on for a further 12 months tenancy, was some damage forgiveness for a cracked stovetop. Now here's where Wellington's situation gets really complex. While the rental market is recovering, house prices are still falling. And that disconnect is creating confusion for everyone trying to understand the capital's property market. QV's latest house price index shows that for the country as a whole, prices were up 1.1% over the 3 months to December 2025. Auckland turned around and lifted 0.8% in the quarter. Christchurch was up 2.5%. Hamilton up 2.1%. But Wellington was the only main centre where values were still falling, down 0.5% in the quarter. And over the full year, Wellington prices are 3.6% lower than a year ago. QV spokesperson Andrea Rush says Wellington prices are now 30% below their previous peak values in some parts of the city. She explains what's driving this. You still are having the impact of job losses in the public sector, people leaving, students leaving, people going overseas. So what you've sort of got is an excessive housing supply, not only in terms of rentals, but also in terms of properties that are on the market. Wait, students leaving? But we just heard students are flooding back into the rental market. So what's the real story? Here's what's happening. Students are returning to the private rental market in early 2026, which is driving the 16% demand surge. But throughout 2025, student numbers were down, which contributed to both the rental glut and the housing market weakness. The rental market is recovering faster than the sales market because students need places to live right now, But they're not buying houses, they're renting. So you've got fewer people looking to buy property overall, which keeps pressure on house prices. But you've got more people looking to rent, which is tightening the rental market. Rush says there's a positive side for first home buyers. There's a positive to this. There was a period there where rents were very high in Wellington and house prices were too. So there's always a positive side to the reset that we've seen since the previous peak. But there's a catch. As Rush points out, interest rates remain much higher than during the previous peak, so servicing debt is still a barrier to potential buyers. So, where does this leave everyone in Wellington's property market? Let's break it down by group. For landlords who survive 2025, Cockburn has clear advice. Set rent according to the market. There's no point trying to hold out for a rent that the market won't bear. Your property will sit empty. It's better to take a 5, 10, 20% or even bigger discount if necessary to get the property rented. Peter Ambrose agrees. Making sure you have a well-maintained home or flat is absolutely paramount. He says only strategic and confident players will survive, and good quality properties are being taken off the market quickly. The ones sticking around are either flawed or the owner isn't being price realistic. For renters, Cockburn warns that current low rents are likely temporary. I would not be going into a property that was typically out of my reach financially, because in the next 12 months, the rent's going to recover, and if it becomes out of reach, then you just have to move again. His advice? I would go for the property that suits me, that in a normal market I could afford, and in any event negotiate the best rent I can for that property. Serena Gibbon from Tenancy Advisory urges renters to take action while they still have leverage. Tenants who for so long just have to suffer, forking out most of their income each week just to get a roof. I'd love for more tenants to take action at this moment and realize that they have leveraging power. But she warns the rebalancing of power is superficial and unlikely to last. For buyers, the situation is complicated. Wellington real estate salesperson Mike Robbers says he's optimistic about the year ahead, with the first big round of open homes happening mid-January. Property investment coach Steve Goody says Wellington feels flat, but there are green shoots. There are not as many listings for a summer period as we would normally expect. Rush expects a stable 2026, noting it's an election year which can create caution. Buyers and sellers take a more wait-and-see approach. But here's the reality. Across the country, there are more properties listed for sale than has been seen in a decade. Buyers have plenty of choice, which keeps pressure on prices. Let's wrap this up. Wellington's property market just went through a dramatic reversal. In 2025, landlords faced the worst rental market in a decade. 1,700 vacant properties, rents crashing from $650 to $595, and desperate incentives just to fill places. In January 2026, demand surged 16% as students flooded back into the private rental market. The power dynamic flipped overnight, but house prices are still falling, down 0.5% in the December quarter and 3.6% over the year, with some areas 30% below peak. The disconnect? Students rent but don't buy. Job losses continue pushing people out, and high interest rates keep first home buyers locked out despite lower prices. If you're tracking Wellington's property market, hit that like button and subscribe to Kiwi Property Reports. We'll keep you updated on what's really happening in the capital. Drop a comment, especially if you're a Wellington landlord or renter experiencing this firsthand. Here's my final thought. Wellington's rental recovery doesn't mean the housing crisis is over. It means the market is fragmenting, winners and losers emerging based on timing, leverage, and position. Understanding which side you're on is critical. Thanks for watching. I'll see you in the next report.